You're listening to Where You Live with Gene and Tony.
Where You Live with Gene and Tony. We're broadcasting from the Natural Green Lawn and Landscape Studios. We're brought to you by American Family Insurance, the Kim Bennett Agency, and Extreme Exteriors. You can count on Extreme Exteriors for expert installation of exterior siding, roofing, soffits, fascia decks, windows, and more. With their knowledge and experience, they can design the perfect solution to make your home beautiful and energy efficient, saving you money. Call them at 763-441-1334. That's Extreme Exteriors, 763-441-1334. It's time now to hear from the Community Associations Institute. The CAI Minute is brought to you by New Concepts Rental Management. Whether you're an accidental landlord or a seasoned investor, New Concepts Rental Management can help you achieve your financial goals. New Concepts Rental Management can advise and guide you through every aspect of the business. Give me a call, Tony Crockett, at New Concepts Rental Management, 952-922-2500. New Concepts Rental Management, 952-922-2500.
Are you a volunteer in your homeowner association? Maybe a residential property manager wanting to increase your industry knowledge and obtain professional credentials in property management. Are you a vendor or professional offering services to homeowners and associations or property managers? If you said yes to any one of those questions, then join the Community Association Institute. The CAI is a great organization, helping you be informed and more proficient in your homeowner association board member or property manager role. It's also a great way to network with potential clients. For nearly 40 years, CAI has provided education and resources to volunteer homeowners who govern community associations and the professionals who support them. Visit cai-mn.com to learn more. That's cai-mn.com. The Minnesota chapter of CAI holds monthly managers' luncheons, board member education training, property manager certification training, and much more. It also produces a bi-monthly informative magazine called Minnesota Community Living. Why not join the Community Association Institute today? You can do so online at cai-mn.com and select membership.
Well, Gene, what's next?
Well, we've got a topic that will be of great interest for investors of property.
Okay.
One of the things that people always want to know about is how can they save on their taxes?
Yeah.
How can they save more of their hard-earned money for themselves? And there is something out there that applies to investors of real estate-owned property called cost segregation. Now, we, of course, in our efforts to bring the best of the best to our listeners each and every week, we scour the nation, and we're happy to have with us live on the show today Mark Spangler, who's an advisor with Core Solutions Group, which deals with cost recovery. They are the cost recovery expert. Hello, Mark. Thanks for joining us on the show.
Thanks, Gene. I'm happy to be here.
And in full disclosure, too, folks, I need to let you know, Mark is also my brother-in-law, too.
Ah, okay.
So when we're talking about someone who is smart, this guy's smart.
Well, obviously,
he married into the right family.
There you go. There you go.
So
that goes without saying.
But
That's a feather in my hat. That's
right. But all that aside, did want to get you on the show, Mark, because you are involved with something that I think is really interesting that probably not a lot of investors of real estate may be aware of, and that is what is called cost segregation. Can you tell our listeners, begin by telling them a little bit, what is that and why should we care about it?
Well, basically in a nutshell, cost segregation, it's a tax strategy that allows commercial building owners and investors to accelerate the depreciation rate of their properties. It allows them to take larger tax deductions for construction-related costs over a shorter period. Rather than spreading them out over the standard 39 years for commercial buildings or 27 and a half years for residential rental properties. So it really accelerates and sort of pulls out of the 39-year into 5, 7, or 15-year depreciation schedules.
That is quite a bit of difference then. We're talking about instead of 27 or 39, we're talking, you said, 5, 7, 10 or 15?
That's right.
Okay.
Those are typically the depreciation schedules. We're able to reclassify real estate into personal property.
Okay.
Because so much typically is so much of the real estate as it's placed into service. There are many building components and so on that really would be better classified on a shorter period.
What are some examples?
Well, an example would be certain wiring systems within a building, or flooring at time, even,
Okay.
and actually many other areas as well. Sometimes millwork, wall coverings, and so on.
Okay. All right.
Even roofing at times. Yeah.
Now, would you say that this cost segregation is something that most CPAs are aware of?
Well, typically the big four accounting firms will a lot of times address this issue. They have the resources behind them, and in fact the engineering resources. But it's a great question because most CPA tax practitioners really don't have the resources to be able to substantiate these claims. It really takes engineering studies. In fact,
Wow.
the IRS themselves in 2004 came out with an audit technique guideline for their field examiners, and this is so that the field examiners can, to evaluate some of the cost segregation claims. And the IRS recommended approach is a detailed engineering study. So not all CPAs have the ability to do this.
Sure.
So it sounds like with what you're saying then, a number of CPAs that may be doing this for their clients are probably they're just taking an estimate on items, whereas what's probably different with your company is you involve engineers in specific reports, so that
That's
you
exactly
can
right.
so you can deal with so you can say we're not talking about roundabout numbers. This is very specific then.
Absolutely right. In fact, some practitioners could, have more exposure there because they may have used several of the other methods, like rule of thumb, survey, sampling, those kinds of methods that are not recommended by the IRS.
Rule of thumb? That sounds that sounds like not real scientific. Is it? Well, the rule of thumb.
You're right.
So
You're
are you
right.
saying the IRS is requiring this engineering documentation, or you said use the word recommending?
Yes, I'm using the word recommending because that's what they recommend in this audit techniques guideline. And this is really the method, or the detailed engineering method, is the one that will stand up to IRS scrutiny.
Gotcha.
In fact, we have had 100% of all of our cost seg studies accepted by the IRS. So we're really batting 100% there.
100% of the time, getting the IRS to say to them, lie down by your dish, right?
Yeah. Do you know, generally speaking, is the IRS challenging this much?
Well, they're not. If the documentation is there now, our company and others who do this provide generally, 100-page detailed engineering reports to substantiate it. So even if there's a phone call from the IRS to ask questions or whatever, we can easily go to the substantiation for that claim.
How long has something like this been in place, cost segregation?
Well, it's actually been since 1987.
1987, okay.
Yeah, so buildings that have been placed into service from January 1st, 1987 and forward are candidates for this type of tax strategy.
Let's talk about that real quickly, Mark. Who are the ideal candidates where something like this would be a great idea for them to pursue?
Well, typically what we find who gets the greatest tax benefits are buildings like funeral homes, resorts, restaurants, assisted living, hotels, manufacturing facilities, grocery stores. These are all very good candidates. But across the board, we tend to see 15 to 30% reclassification from real estate 39-year depreciation to what's called personal property. And so you can imagine the savings that result from that.
Are you saying that it may not be the best strategy for residential properties?
Oh, it definitely is. In fact,
all right.
I inadvertently left that out.
Okay, all right, good. I just wanted to check.
No, that's very good because there's a lot of building components typically, as compared to, say, a warehouse. I mean, we can still pull a lot out of that, but apartment buildings are excellent candidates because typically there's so much building components in there that can be reclassified.
And so much that's getting heavy wear and tear.
In
my experience.
Well, say, Mark, we're running out of time, but I want to, before we let you go, I want to make sure that our listeners, if they have questions, if they want to contact you, tell them, how can they get a hold of you?
Well, I'd be happy to give my direct line.
Okay.
And that number is, by the way, my name's Mark Spengler. I'm a CPA, and we like to work with CPAs to provide these tax benefits for their clients. But the number is 888-706-4646, extension 423. And my email address is mspengler, SPENGLER, at coreadvisors.net.
Okay.
And you could check out our website at www.coreadvisors.net.
Okay, and lastly, you're not here trying to take away the business of CPAs. You're here to be in support to put this cost segregation in place. You're not trying to take away the business from those CPAs. You're just trying to help the investment owner in being able to realize more tax savings.
Absolutely, and we want to work with their trusted advisors, which are those CPAs and tax practitioners, yes.
Okay, well,
very interesting.
Mark, thanks a lot for taking some time to be on the show today.
You're welcome. Thanks for having me, Gene and Tony.
Okay, folks, that was Mark Spengler, advisor with Core Solutions Group, a cost recovery expert. We're going to take a break right now. Don't go away. We've got a lot more of Where You Live with Gene and Tony after these messages.